Houston Real Estate Radio starts right now.
Welcome back. You're listening to Houston Real Estate Radio. I'm Shannon Register, and if you missed any of today's show, you can catch us online at HoustonRealEstateRadio.com. Every week we try to answer your real estate questions on the air, so if you have one, you can call us at 281-882-8088. You can also find that number on our website, and all of our sponsors are there with links to their website, so you can find them as well. The sponsor for today's show is theperfectlight.com. You can call them for all of your landscape lighting needs. That's theperfectlight.com. My next guest is my preferred lender that I always recommend. He is Mike Lesmeister with Ameripro Funding. He and his partner Rick can get you qualified for a loan so that you know how much house you can afford when you're going out and looking at houses. And now is a good time to buy because interest rates are still low, so it's still a good time to buy. If you can find what you're looking for, it's a good time to buy because we know we're short on inventory out there. So, Mike, tell us, what are interest rates doing right now? Because we saw a spike and now it's come back down. What's going on with interest rates?
Yeah, there's a lot of uncertainty in the market today about where the economy's going. You get one report that comes in that looks favorable on the economy, and then another one comes in that's less favorable. Mm-hmm. A lot of the momentum recently around interest rates has been whether the Federal Reserve is going to continue to buy mortgage-backed securities as they have been, essentially subsidizing rates. So we did see that rates spiked up quite a bit. There was a little bit of easing today. We're starting to see that rates are moving negatively again. But once again, we have to keep this in a historical perspective, mm-hmm. right? It would have been great if you could time things perfectly and get your rate locked in at 3.5 or whatever it was at the time. It would also be great to be able to time the stock market, when it's at its very low.
Absolutely,
too, right? But when we look at it at a longer term perspective, when we look at a 30, 40 year time frame, and we're still near the rock bottom of the rate of the rate scale. So still a great time. Rates right now pretty much in the 4s for most people on a conventional or FHA 30-year fixed rate loans. Mm-hmm. All
right. Sounds good. Well, today I would like to find out some information on mortgage insurance. Most people who have a mortgage pay some form of mortgage insurance. So tell us about the different types of the mortgage insurance that are out there based on the different loans, because I know there's FHA loans, there's conventional loans, and then of course you have VA loans. So tell us about that.
Sure. Well, let's maybe start with what is mortgage insurance, right? Because a lot of people who aren't in our business, they've heard of it. They've mm-hmm. heard MI, PMI, MIP,
what is it?
POP, whatever, right?
Uh-huh.
And they maybe don't know what mortgage insurance is. So let's maybe start there. Mortgage insurance is like any other insurance. It's designed to protect somebody against risk, right? When we have homeowners insurance, it's protecting us against our house burning down, being vandalized, flooding, whatever it might be.
Right.
In the case of mortgage insurance, the person being protected is the lender. And what they're being protected against is in the event of a default or a foreclosure, because they lent too much on the property, there's risk in how much they lend. So what happens with mortgage insurance is anytime you're putting less than 20% down on a house and using financing that's less than 20% down, the lender is going to require mortgage insurance. And that protects them against that differential between 20% down and what you actually put down in the event of a default. Okay.
And so the buyer is paying this insurance, but it doesn't pay out to the buyer, it pays out to the lender.
Exactly. It pays out to the lender. You got it.
All right. So tell us about how much are we talking about? I mean, are we talking about a $1,500 policy, a $15,000 policy? What are we talking about over the term of the loan?
Right. The mortgage insurance, the cost of that mortgage insurance is going to vary by a number of different factors. One factor, which you alluded to just a minute ago, is what type of loan is it? Conventional loans which utilize private mortgage insurance, where the mortgage insurance is provided by private companies out there competing in the marketplace. Mm-hmm. And then you also have government loans. Those would be FHA loans, VA, USDA, rural housing loans, where that mortgage insurance is really provided by the government or subsidized by the government. Now, they may call it something else. So with VA, for example, they call it a funding fee. With USDA loans, it's a guarantee fee. But it all basically is designed to go in the same purpose. It goes into kind of a reserve fund that
protects the lender.
Exactly, it protects the lender. In this case, a reserve fund for the government that they use to kind of pay out any claims that may happen. And that's been a big problem for FHA over the last few years, because FHA's reserves have been so depleted because of claims, because they've had to pay out mortgage insurance and have had defaults, that they've had to increase other fees and and so forth to be able to replenish some of those resources. So anyway, the cost, type of loan is one factor. The second factor is how much are you putting down, and that really affects conventional loans more than it does government loans.
And you're talking about down payment at closing,
right? So there's going to be a higher payment, higher mortgage insurance premium if you just put 5% down on a conventional loan than if you put 15% down.
Okay.
Another factor will be your credit score. We know that credit scores affect rates. The higher your credit score is, the more favorable rates you're going to get. And it also applies to your mortgage insurance premium too. You're going to get a lower premium, annual premium, the higher your your credit scores are. And then there are a few other factors. What's the term of the loan? Is it a 15-year loan? Is it a 30-year loan? So there are a few other factors, but those are the main ones that affect it. Your mortgage insurance premium, let's say, on a can vary. If we're talking about a monthly premium or what's called an annual premium paid monthly, on a conventional loan can range anywhere from probably 0.25 or 0.30% a year, all the way up to 1.3 or 1.4% a year.
Percent of the original loan?
Percent of the loan.
Okay, not the current loan
right.
after you've paid it down, but the original loan.
Right, exactly. Okay. It's your mortgage insurance premium is based upon your initial loan amount that you're borrowing.
And then you're just paying monthly payments towards
exactly,
it.
Exactly. Now, there are two different types of mortgage insurance too. There's upfront mortgage insurance, and then there's annual or monthly mortgage insurance too. Okay.
What's the difference in those?
Yeah, with an upfront mortgage insurance premium, you are paying a certain percentage of your loan amount upfront as a lump sum. Okay. With your annual premium, you're including that as part of your regular monthly payment, with your principal, your interest, your taxes, your insurance, all that. That's all wrapped into your monthly payment. On FHA loans, for example, FHA is going to get you both ways. They're going to charge you an upfront premium and also an annual premium too. Those have risen steadily over the last couple of years, the amount of those premiums. On a VA loan, there's no monthly mortgage insurance, but they do charge an upfront funding fee. Some veterans can get away with not having that. Veterans that, for example, have a service-related disability have the opportunity to have that funding fee waived.
Okay.
But there's no monthly mortgage insurance on VA, which makes VA loans very, very attractive because, as you know, there's 0% down, too, for most veterans.
Yeah.
And also for conventional loans is where you have the most customizable options. There are options where you can just pay, which most people take, where you just pay a monthly MI premium. There are also options where the borrower can pay just an upfront premium instead. There are also options where the lender can pay your mortgage insurance premium for you. Of course, there's a trade-off for that, right? And typically, that's a higher than market rate that you're going to be paying to get that option.
Okay. So when you buy conventional, if you're not doing an escrow account, is that when you would pay it all up front?
There are a few different reasons that you would pay it up front, and we don't want to get too far into the weeds on this, and part of it may have to do with your debt ratio and how much you could qualify for. There are several different reasons that you might do an upfront premium.
Okay. All right. So you can structure the way it's being paid. You can structure it different ways depending on upfront or not. And how can someone avoid mortgage insurance where they don't pay it at all, but they're still getting a mortgage?
Right. That's a great question. The first way, as we identified right at the top of the segment, is put 20% down on a conventional loan. you don't pay mortgage insurance. Now, it is important that we talk about that. Putting 20% down on an FHA loan or a USDA loan is not going to get rid of the MI for you.
It's really
only on a conventional loan that's going to eliminate the mortgage insurance. The other opportunity that you have, which used to be real popular several years ago, was going with combo loans. So you could take out a first mortgage, whether it's usually it's on a purchase transaction. You take out a first mortgage for 80% of the purchase price. And then you have a second mortgage, a piggyback second mortgage that might cover another 5%, 10%, or 15% of that.
Mm-hmm. So then you're either putting 5, 10, or 15% down, and the second mortgage is covering the difference.
Exactly. Now, the trade-off for that is those second mortgages usually carry much higher interest rates than you see on the first mortgage. Back several years ago, there wasn't as big a gap in some of those rates as there is today, and also mortgage insurance premiums have come down a bit since all the losses that were being incurred during the meltdown and during those days. So there are certain times when when going with what's commonly called an 80-10 or an 80-10-10 mortgage might make sense for folks. Mm-hmm. But in most cases, usually just paying the mortgage insurance on a conventional loan is probably going to be a better way to go.
All right.
Your mortgage lender can obviously give you, run the numbers for you and tell you which is going to be more cost effective. Yeah.
All right. Yeah. Sounds good. Well, we appreciate the information, Mike. Tell us how people can contact you if they are thinking about buying and they need to get pre-approved to purchase. Absolutely. And now is a great time, as you know. School is starting at the end of August. So now is the time to be able to get into a home, get in your new school district, get registered for a new school. Mm-hmm. And we can still get folks closed in time to get into those new schools. Folks can contact us by going to our website at www.hlstx.com. They can contact me directly on my email, which is mlesmeister@ameriprofunding.com. Now, you got to spell that last name.
I know. It's mlesmeister, LESMEISTER, at ameriprofunding.com. Or they can certainly call our office at 832-286-1600. And they certainly have access to us on the weekends and after hours if needed as well. So, all right. Sounds good. If you missed any of that, you can always find a link to Mike and his partner Rick over at Ameripro Funding from our website at HoustonRealEstateRadio.com. If you missed any of today's show, you can watch it there. You can also join us on our social media, Facebook. We're out there. Thanks for listening this Sunday afternoon, and we'll be back next week at 1 p.m. with more news and information you can use on your next real estate transaction. If you have a question that you think of for real estate, give me a call, 281-882-8088. And if you'd like to know the value of your home, let me know that. We won't air it, but I'll call you back and let you know what the value of your home is, because a lot of people are thinking about selling, but they want to see just how much their home is worth. Thanks for joining us here on Houston Real Estate Radio.